Hello friends, today we're taking a look at Pfizer, ticker symbol PFE. This stock has been in quite a roller coaster. We'll be looking at the stock performance in the last 5 years, some of the current news, the latest earnings report, and then we'll look at the last 5 years fundamentals, dividend history, and of course, we'll try to find a fair value for this company. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. So the question is Pfizer a great company? Well, let's start looking at what analysts are looking at Pfizer to recuperate from some of their issues with expenses, and Pfizer has been very, very reliant on COVID. Selling their vaccines and stuff like that. So have they turned it around? If you look at the analysts, they think that in the next year, the price of Pfizer could get all the way to $35 to $36, which will be somewhere around 24 to 25% on the upside. In the last 5 days, it has gone up almost 1%. In the last month, since earnings have grown, the price have gone up 10%. Year to date is flat, but as you can see, there was quite a drop all the way to almost $25 on April, and then they announced earnings, and then it started going up. In the last year, Pfizer has lost 25% of their value, and in the last 5 years, it has lost 24%, with most of the gains happening during the COVID era. So whenever we look at the dividend, Pfizer pays a nice dividend right now. If you were to buy the stock right now, you will be getting $1.68 every year, which will be close to 5.8% of returns. So this almost 6% with this 24, that's almost a possible 30% turnaround. So what do you guys think? Let me know what you think in the description below. If we jump to the earnings, we can see that Pfizer had a really amazing beat. They beat on normalized EPS and GAAP EPS by quite amount. They reported 82 cents on normalized EPS and beating it by 31 cents. And in the GAAP, they reported 55 cents will be a 21 cent beat. They also beat by almost $1 billion in revenue. In the last 90 days, they will be reporting again on July 26, so about 2 months from now, and they're looking to they're estimating a GAAP EPS of 24 cents with a $13 billion revenue, and the analyst revisions in the last 90 days, they're mixed with 7 on the upside and 8 on the downside. Looking at the earnings, the reason why Pfizer is starting to go up is not only because they beat earnings, but also because they raised their outlook on cuts, and also because of their smaller. They started to rely more on non-COVID drugs. So that is a really good thing for them. So the company also changed their expectations for the fiscal year from $2. Almost a 10-cent more per share in guidance. So that's pretty good, I think, especially because they have been kind of in a loss. A lot of you guys have been asking me to analyze Pfizer again. This is the third time that I do. Look at the other videos that I mentioned before. So what we're going to do is we're going to be jumping at the History of the last 5 years. Before that, just don't forget to subscribe, leave a like, make a comment. Let me know if you are an investor in Pfizer, or if you're looking at a certain point in which you will be jumping. So yeah, let's look at what it has been happening in the last 5 years. I know normally I have 10-year data. There's a problem with the program that I use. They're just giving me five years, so I will try to work on that. But in the last 5 years, it has grown 6% CAGR, the revenue. But I will be, if I were be doing my analysis, I'm going to be thinking that they're going to go back to the medium, because a lot of these things were COVID related growth. So that's something to consider. Same thing with earnings. Earnings actually are negative to the year. But I will be looking at them going back to somewhere around $2 a share, expected, for just like they just reported the expectations over here for the end of the year, somewhere around $2, $2.15. That's about right, I think. With free cash flow, they had a lot of money during COVID, and I will be thinking that they will get back to somewhere around the $2 of free cash flows per share. Book value has been growing. It's at $16.31 with the average. These averages for return on equity and return on invested capital, I wouldn't focus too much on that because of COVID. Dividend has been growing at 2.7%, which is pretty nice. They have a little bit of debt, but I wouldn't worry too much about that. They have been all over with their outstanding shares. They kind of remain flat from 5 years ago. So with all of this, I will probably not be considering Pfizer as a company to keep for a long term, but I can see maybe in the short term, if you wanted to play a short term recovery, if he were to get to the $2 per share in earnings, that could be interesting. So now let me just first, before we jump into a fair value for this company, let me just give you a disclaimer. I am not a financial advisor. Everything that I say here is just for educational purposes. This is just my opinion, and do not make any decisions based on financial decisions based on my comments over here. I would love to hear your comments, so write them below. When we look at the multiple historical multiple valuations, or we see a price somewhere between $42 to $30 of a fair value. If we look at the revenue base valuation, as we grow it at 6%, the revenue, just like it has been going, with a profit margin of 27%. We do all these calculations. 15 PE, that's the PE that I'm going to be using. Sorry. And receiving and growing the dividend that they have been. We're looking at a fair value of close to $31 to $32 using this valuation method. The discounted earnings valuation, I will not be using it because it's just all over. As you can see, my grow, I think they're going to remain flat. So if we use this, it will be very, very low. It will be at $20, what it will be, the valuation. Payback time is also pretty crazy. So the averages are all over, and because of this big swing. So I wouldn't really use this number. However, using a little bit more of a discounted cash flow, using at the average, we're looking at somewhere around $36. I would probably imagine that is close to 30 if we were to change some of the numbers. Owners, earnings, valuation, I will not use it because it's all over the place. With that said, I will probably be using the 5-year average because all the averages are close to the 10-year average. So what happened, what they were making before COVID. So with those numbers, we're looking at a 5-year average of fair value of $35. I personally will be agreeing more with. I would probably be with a $32, somewhere around there, will be what I will consider my fair value. But that's just my opinion. But if we were to use what the calculations gives us at $34, and we use, let's say, a 20% discount margin of safety, we could be trying to buy Pfizer somewhere around $27.50, and then try to sell it somewhere around $30 once it passes the $33, $34 if you are looking for a quick trade. If you're looking at 25%, that will be dropped to $25, $26, which is what it was not too long ago. Before the jump, it was at a month ago was at $25.26. So that will be a nice short-term gain. So those are kind of my opinions. I personally think that if it gets back to $26, I will honestly think about having a small position just for a trade, just like a risky position, just like you heard me talked about CBS. So those are my opinions. I don't know what you think about. Please write down, leave me a comment down below. Let me know what you think, and I hope to see you in the next video.